Hi, Warriors. Weak dollar, weak dollar, weak dollar. What a short from 101.50 from last week. I can't talk this morning. Okay. Hi, Alexander, Steve, Ingmar, AJ, James, Ryan. How are you, bro? Kurt came in. How are you, buddy? Bran, Hugo, Mike Weissman, John Hawkins. How are you? Okay. We're at full strength today. We have the whole team here. So let's take a look at what's going on here. I've revised a couple of targets in the dollar. I'll show you why. Everyone see my charts?
Yes, sir.
Okay, so, we're almost back at the lows. I'm just looking at this formation in round numbers. Call it 98 to 101.50. It gives you 195, 94 and a half for a final target. We'll see what kind of divergence develops here. But it was a huge trade from last Monday. If you acted on that tariff news after they had that gap higher opening, big move, right? Big move in Canada from being bearish at 140. Here we're already at new lows. I think I talked about 135, 134. I'll stick with those. And looks like Euro wants the highs here. I think that we're going to 119 to 120. There are guys calling for a pullback here. I don't see it. They're talking about a pullback to 109. I don't know what's going to generate that. I'm going to stick with the trend. And also the trend is down in US dollar yen. I still think we're going to take out that 140 level. Few days away, and let's say we have some reversals happening here. And let's see what's going on here. Getting a very powerful rally in crude, and we're getting ready to break out. It's been the most patient I've had to be in a long time. I started buying it on the April crash day, lived through this pullback, and had to be patient through all this sideways action. I think we're going to 68, and then if we get through there, up towards this major trend line. I don't know what
OPEC didn't. They announced over the weekend people were thinking that they were going to,
increase.
increase their production, and they didn't more than the number. I think it was 411,000. I was actually just trying to read on it, but that's the whole reason why it's up significantly today.
Still nothing but bears out there. Okay, so I think that's going to be part of the fuel for this rally. Everyone hates crude. The unanimous or consensus opinion is 50, 40, and I think we could get there, but not till we squeeze every short out of here. I'm looking. I have a campaign trade that I want to do. This may have already left the gates, but I was looking for an entry in nat gas down here. So we'll see. I really think there's a huge move coming. The fundamental narrative is electricity shortage, and all those AI centers are going to need electricity. Natural gas is the natural thing to go with until we, get further along with nuclear. So I really like this nat gas. This was like wave one, and we're pulling back here. I thought we might get one more shot down to 2.5 for the move. But if you look at the weekly, you could make a huge case for, I don't know, maybe almost up towards $8 to $10 if you have equality. This bottomed at $1.50. I was on this one from this dot last year, and then I just stopped paying attention to it after I got out. But higher low. So this may have just been the first wave out for $3.50. You could expect some type of fib extension from here if we get going back over 4. So 3.5, could be $6. So that could take us all the way back up here. So that's something I like a lot. And I'll wrap it with S&Ps. The S&Ps, I think, they're due for some lows here in the next couple of days. It's just a matter of how deep it goes. Kind of looks like there's, could be the magnet here with the gap in the moving average. We'll see. I have no position there. I covered my Uber puts Friday. Let's see how that comes in. Bitcoin still looks heavy to me, right? So this was another failing rally, kind of similar to what happened in S&Ps. So that's what I see this morning. Been short the dollar for a while, taking some in because you still have to get paid. And I'm going to go to Ryan now. So Ryan, Euro,
Yep.
what are you doing here?
At me, nothing. I'll be looking at 115.
That's right.
My range 112, 115. We had the 112 test. Now
Right.
we might get the 115 test, and that will decide whether this move has got real legs or not, or if we're just going to ping the ranges and trade through the news. And that big blue candle is it.
Yeah. Right. That was what, last night?
Yeah.
Yeah. Okay.
8 hours ago. Yeah, whatever. Yeah. So
All right.
we know what the news is now, and the market's reacted. Now we got to find out if it's going to continue or not. But it's not looking good for the dollar at the moment, and your president isn't doing investors' confidence any good by popping. Last week we're coming through thinking, oh, okay, tariff stuff's calmed down, deals are on the table, and then boom, yeah, we're going to double steel tariffs on everyone tomorrow or Wednesday, whenever it is. And once again, the market goes, well, what the fuck?
Yeah.
How can we trade this stuff? And that's plus all the other stuff, Ukraine, China, everything else going on, Walla being a bit dovish. So it's there's been a lot of cards in the house, and they've sort of blown over a little bit.
So technicals are even more important. And, it was pretty obvious that if we got through 4.5, that we're going to have some type of extension and move out of the Aussie. I'm looking for these highs to be taken out. Go to maybe 66, 66.5, which means, continuation. In Blake's week ahead video, what was on the cover was gold hasn't topped and gold's flying. He talked about this last week. So we still have this big move happening in gold. Silver, not as much. Gold silver ratio heading up. And then this looks kind of nasty, right? The bonds. So, we're going to have some type of gap lower opening. So I talked to Jimmy, and he's been looking for slowing later in the year. And he said he was waiting because we had a confirmed low. There's no divergence. I think he was talking dailies on this. So, bonds don't look great after having a good week last week, and the 10-year looks weaker. So the duration, the steepening of the yield curve favors the shorter term paper, the 2, the 5, the 10, not the 20, not the 30. So it's I guess a bull steepener. I don't know the difference between a bear steepener and a bull steepener. All I know is it's getting steeper. So what about cable? Your prime minister, what's he doing? Stammering around. What's he do besides stammer?
Runs around with his pants on fire most of the time, giving away our land, giving away trade deals, giving away everything to everyone else without taking anything in return. Yeah,
sounds like a good negotiator. So him and Trump, him and Trump are are opposites.
Yeah, exactly. Exactly.
They're complete polarity in them.
Yeah, bend over and insert here. But anyway, yeah, cables. It's following the dollar, obviously.
Yeah.
Euro dollar seems to be going a bit faster, hence why we're seeing euro sterling up a bit. Which I'm still a little bit short, and I'm deciding whether to chuck that in because we got a little bit of a move up here.
Yeah.
We held the 84 last week, which
Yeah.
after all the fixes and end of month stuff was potentially significant. And we held that, and now we're trying to get through this 80 through 84.30 level. Do that, we'll probably get a run on that 60 level you've got marked up there. That's going to be the next one.
Okay. I think, Ryan, that your short term it could work, but I don't know if I'd look much more for than this is going to be the key. It could test 84 again.
Yeah,
and then go.
needs to get under that. If
Yeah.
it being short needs to get under that. Otherwise, yeah, if it doesn't, then we're probably going to push up and maybe have a crack at the 85.
Okay. Yeah, that I think 61.8 on this is 86. So that's what I'm looking for, which would still be a lower high. So if the euro's making new highs or blowing off, and euro pound can't take out this high, I'm going to start looking for fading the euro.
Yeah,
when EG gets up here.
Might be in
Anything
about 2 years.
10 years it'll get up here?
About 2 years. 2 years. You know how fast this thing moves.
I'll call it 10 days.
Okay.
All right. So it's probably somewhere in the middle. What do you think? All right. Thanks so much, Ryan.
Cheers, mate.
Great to hear your voice, after I Jones for doing nothing over the weekend. Let's go to K-Man. Good morning. How are you?
Righty, hi,
buddy?
Bill. Hello, everybody.
I saved the yen for you.
You saved the yen for me.
Well, I can't save the yen, but I say, well, I don't have to. It's strong.
Yeah,
so
the one having a very good trade there is Ryan. He sold it.
Yeah, I forgot.
I mean, that's a good one. Yeah, a bit of
up here. I think
decent,
he did it.
Yeah, decent supports coming in around that 142, but the dollar in general is looking a bit weakish. So negotiation front, not a lot has changed, but I still think they will get a deal. So that's positive for yen likely. But yeah, for as far as we are still in this 42, 40, 46-ish range, I think we need to respect it. The rest of the dollars are looking weak. Yeah, that's what I think. At least to start the month and the week. There's of course a lot happening this week. A lot of PMIs, jobs reports, central banks, etc., etc. So it's going to be a very busy week. But I still like the overall the dollar short. Yeah, that one, the dollar cat that you're showing there is on one big level. If we break down and if we hold below this 137, 15, 35-ish level, I have the next level at 134.
Okay. All right.
Yeah, and but of course it could all end up being a F.A.C.E. But no, if it goes, it's going to be significant in my opinion.
Yeah. So diverging a little bit, but
yeah, and a bit counterintuitive as well, because if you think that Trump is threatening to slap 50% on steel, they do import a lot from Canada. So I was a bit surprised actually to find the Canada so strong this morning. But yeah, I think it's possible that over the course of the week or so we really break down. It is possible.
Canada's making trade deals with everyone else. It'd be ironic that we're trying to, our country's trying to hurt Canada for not becoming the 51st state or 52nd. But they may come out of this better than they were before.
Could be.
Do you think that's possible?
Yeah, because if you look at, well, I mean, if there is differences, obviously, but if you look at the mix as well, had a bit of that month-end shenanigans, and now the mix is back onto a stronger footing. So the USMCA At least the M and the CA are not doing too badly right now.
Yeah. So all our trade partners that we're leveraging, their currencies are acting pretty good
Yeah,
in the
and
face of it.
well, that's what we were talking about since the start of this whole saga. It's going to depend on whether the U.S. Trade relation countries are going to work with each other and not specifically turn their back towards the U.S. but find a replacement for the U.S. At least in parts, and that's exactly what's happening, right?
Yeah. Anything else? You have comments on metals? Did you get back in silver?
Metals, yeah, again, tried that 32.70 in gold and bounced once more. And it's really 32 and a half, 32.80 is a very good zone right now. And there's a lot going on geopolitical side as well.
Yeah.
This increased activity in between Russia and Ukraine. There's talks about China and Taiwan.
Yeah.
There's everything is going on, and then the dollar a bit weaker. And the result is that gold is again a good hedge against everything that can go wrong in the world. So um, that's how we trade it. I do have to speak about gold. I do have a very decent resistance zone 33.70, 33.85 that I'm watching on gold, and on silver. Oh, sorry. Yeah.
That's all right.
And on silver, we need to get back above that prior high there. What was it? 33.65 or
370.
so? Yeah,
Yeah.
exactly. I mean, I want to see confirmation that we get above there to really say now we could be off to the races. And the last one that I'm really paying very close attention to, there's a lot of course, but is that 60, 30, 40 in the Kiwi. Yeah, we had that
Okay.
we had that triangle as well there, but doesn't it look a bit fragile? On I don't really like those weeks too much, and those up and downs and that yo-yo. I prefer to watch that 33.65 there on silver.
Okay.
But
It
the
looks
last one
like
is
trying.
the last one is really Kiwi, because we are very close now to a triple or quadruple top, 60, 30 ish. And then from a while ago, there's a 60, 35, 40 there as well. That's a very, very big level in the Kiwi. 60, 30, 60, 40. That's very, very big.
Looks like Aussie Kiwis at pretty good support level. You
Mm.
know, and it almost looks like a little three drive. Is it possible that the Aussie, which has been lagging, can start to lead over
Um,
Kiwi?
yeah, if the Aussie needs to lead, we are going to have to break 65, 65.15 on the Aussie dollar, and then
Okay.
that could accelerate as well. It's that the both are.
They
Of
both
course,
look good.
Kiwi is doing better, but
Yeah.
both have been held back for a while, and if the dollar
China.
continues to weaken, they could both go for a walk higher together.
Okay. Will they hold hands? I mean, they are related.
Yeah, they
They're
will. They
like
will. They
they're
will.
like brother and sister,
Yeah,
aren't
or
they? Or
cousin, or,
cousins? Huh?
or cousin. Yeah, cousins going to the pub together and get drunk together.
They're kissing cousins. All
Well,
right. So that's an Elvis movie. Anyway, so Blake, hope you had a good weekend. Nice
I had a
call
great
on the
weekend. I was
gold.
on the lake this weekend. Yeah. So
Oh
I
yeah,
was
which one? Pleasant?
no, Saguaro.
Oh
So
yeah, nice lake.
it is nice. It was wonderful. It wasn't like super hot and the water was really, really nice and got to do some surfing and some wakeboarding, which is good. My body doesn't feel as good as it would have if I was in my 40s or
Prime?
30s, but whatever.
Yeah.
It's still nice to get out there and I had a nice relaxing weekend. Went to one last graduation party. Is all the high school kids are finally wrapping them up. It's amazing. They go, it's been nonstop for the last few weeks, so it's good. But yeah, I hope you guys had a nice weekend. I actually just had a really great morning. I just closed out if you're not in the Forex Analytics chat room, just closed out all my dollar longs, dollar short, excuse me. I was long euro, long sterling, short US dollar Mexican peso over the weekend, and closed out everything. There's ongoing positioning. You can see that I've closed out everything. So
Nice
that
trading.
was, yeah, it was nice. And look, here's the thing about what we do around here, and I want to make sure everybody's clear. I really dislike what I call weatherman trading. Don't tell me what is happened already. I
Oh
want to know
yeah.
what's going to happen. And I don't want to hear that, oh, it's cloudy outside. I can walk outside and see it's cloudy or it's sunny outside. Same thing with the markets. And this is where, we're gonna talk a little bit about the euro. And like Ryan said, 112 to 115, that's kind of the range. But even if we get to 116, I'm gonna be long euro. Hopefully I can buy on a little bit of a dip today following the ISM. Or at least, today be able to pick it back up long again. Because I like being short dollars. As we've talked a lot about here on the show. There's a whole lot of reasons. You even had Waller last night saying, Waller, who's trying to you know um, you know uh, increase his bid for FOMC chair, is telling us to expect, the door is open for cuts going into this year, and those comments came out in Asia last night. It's one of the reasons why the euro is stronger, or the dollar is weaker across the board. I am looking to sell euros though above 115, around 116.50 on any massive breakout. For those of you that haven't looked, if you go out to a weekly chart and you scroll all the way back to 2005, you'll see what a big pivot this 116 level is. It was a huge level back in 2005, 2015, 2016, 2017, 2020, 2000, post COVID lockdown, 2021 was the breakdown point. And it's going to be probably a really big pivot, because if we hit a new high on a weekly basis, which I'm assuming we're going to, I assume that, the dollar is going to continue to weaken here. When we hit a new high, relative strength on a weekly basis is probably not going to be breaking out. So I'm going to be real nervous about holding longs into that. Doesn't mean that I'm not going to overall believe that the dollar is going to weaken, because I do think we're getting eventually to 120. I don't know if I'm gonna be brave enough, if there's no real reason to be short dollars. If we just are just rallying because it's maybe squeezing, and maybe it's more of a position squeeze, I don't plan on being short dollars up there. I think it's going to be a very messy move on its way to 120 in the euro. So anyway, that's how I'm looking at it right now. But as I was just saying in the chat room, if you guys, again, these are conversations that we have in the chat room. I'll just say that I'll reiterate, I feel a little naked not having US dollar shorts on at the moment, because I've closed them all out, and I feel a little naked, not afraid, like Naked and Afraid, like the show, but I do feel a little naked not having any dollar shorts at the moment. But sterling looks pretty bullish, but we're also at a Gartley pattern reversal. So if you guys didn't see, why I was exiting sterling this morning, that's it. You guys can kind of see why I think that sterling could pull back a little bit from here. But again, it's all about the data that we're going to get today, the ISM data that's coming out. So and then also, look at Kiwi right up against resistance. And this is one that I want to be long so bad, because it feels wrong to be long, but it looks right. And with the RBNZ and what they did last week, this repricing, I think, if there's going to be one that just kind of breaks the mold of what it should be doing, it's going to be, Kiwi. And Kiwi looks extremely bullish right now. Couple other things that I think that everybody should be looking at. is obviously you guys talked about crude oil. Crude oil looks like it's going to rip past, $65. I think that, Dale, as you said earlier, this is a positioning issue as well. You can't find one crude bull out there, and
Yeah,
with
well, no, there's been one.
maybe you.
Yeah,
Yeah, I mean, look, but everybody's like, oh, and they were leaning so hard into crude oil over the weekend, because OPEC was
yeah,
going to increase their
yeah.
output.
They
Yeah,
took out some stops Friday under that range. Where
right.
people had stops under the low of the range, and now they're gone, and the market's going without them.
Just like I said here, the little false breakdown does suggest crude test 65.20, and that was earlier this morning. And you can see the chart right here. That's right, the false
Nice.
breakdown.
Yeah.
It's gonna lead us to a breakout. And again, these are things that if you guys aren't in our chat room talking about this kind of stuff, you should be, because we've been talking about this. These are topics we talk about all day long, every day. And then one of the other things that I think everybody should be keenly aware of too is Bitcoin. Big rejection here at the 106,000 level. If we break this 24% retracement right here, you can see it's 103,000. This is a trapdoor move that opens us up to the 38% retracement. It doesn't mean that Bitcoin's bearish. It just means that we're gonna have a normal 38% correction, maybe even longer. I mean, maybe even more. It depends, how risk appetite does. But this is a trapdoor trade right here. This is a move below 103. We see 97.5, and that would be very logical coming out of this bullish channel that Steve actually pointed out last week. I wasn't even looking at this channel until Steve pointed out, and the only reason why I knew it was there is because I'm going through the analysis in ForexAnalytix, and I was reading Steve's update over the weekend, and I was like, oh, we're breaking down now. What not there,
Yeah.
but Steve had it pointed out over here, and I didn't even see it up until last week. So speaking of which, Steve's
Be
here. So
nice to
Steve,
get it there if you just put the chart up there. Be nice to get it back down where there's confluence with your red line and those moving averages. What
yeah,
is that?
that's
Like
again,
98?
that's the 97,000.
Yeah.
97.5 would be right there, is exactly
Yeah.
where you were talking about.
Yeah.
So but we do have Steve here. So Steve, we have ISM coming out today. Any observations that you're making as you're seeing the markets open for the week? See if he's around.
ISM
Hey, mate.
stands for internationally stupid moves.
ISM is one of the data points this week that we definitely need to be looking at ahead of the jobs report. I mean, we'll have, we'll see the manufacturing ISM jobs component today, and then the services component on Wednesday. So, Steve,
Hey, mate.
what's going on? Hey, good morning.
Good morning. We seem
what are
to
you looking at?
Yeah, we seem to be starting the week continuing the prior trends, right? So I think we're looking in more weakness ahead for the dollar. I'm expecting to see what kind of a reaction the indices are going to give us, which for the time being don't seem to be reacting one way or another. But other than that, I think what we said last week, that the dollar had probably finished its rebound higher, is indeed the case. We are resuming to the downside. Gold is making an attempt to break through the corrective channel, which of course will point to new all-time highs. So I think we are starting, on a nice note, because we do want trending markets, right? We've had a few weeks that price action was kind of choppy most of the times, but I think it's looking good for the days ahead.
Yeah, and you know what? It looks like we're going to get some decent volatility, and I agree with you there. It looks good. I mean, look at this chart in gold. I mean, again, I want to reiterate how many people were just discussing like a potential, blow off top and gold. It was too, it's too bullish. It's got to come down. This is just a bullish consolidation at the highs. That's all this is. And it looks dangerous, doesn't it, to be short?
Yep.
Yeah.
Yeah, it sure does. Hey, I know
I've been cured.
yeah, well, the thing is it again, it's just it's sitting there and it's not backing away, and it's same thing with the
Yeah.
dollar. If you wanna have some fodder on why the dollar can just continue lower, I mean, this just looking at gold looks like it's gonna see all-time highs, if not, higher than that. I know Bruce is here. Matter of fact, I'm glad we have Bruce, who's also a big fan of the Wyckoff developments. But I want to show you guys this really quick. This is a big discussion that we've had inside of our community on an almost daily basis. And Michael Weissman and I actually we talk a lot about this. I'm going to show you guys. For those of you that don't see like the Wyckoff setup here, let me just show you in Bitcoin, right? I want to show you what we've been discussing. So this development right here was where I'm like, okay, we're going to have a big Wyckoff distribution pattern, which is basically this pattern right here, right? And you can see this is the failed rally attempt, and then the pullback. This is the break the ice retest, which we got right here, and then a continuation lower. This is the markdown. Okay, so that all happened, but now I'm looking at this, and with Bruce here, I'd love to get his feedback. This distribution. Also, if you look longer term, that's this distribution longer term. So this was the failed rally attempt, which is also a failed breakout. We're at this period right here, right now. So again, this is not weatherman analysis. I'm not going to tell you after the fact. I'm going to tell you right now, Bitcoin's probably going down here, which is going to be, this is the way I'm going to be targeting Bitcoin to get back down towards, the 50,000 range before,
Wow.
A longer term move. Yeah, so I think this is a long-term Wyckoff distribution pattern by all the institutions in crypto. And yeah, we're going to see an eventual move like this. And then we can be buyers somewhere down here in the 50,000 range in years, in maybe the, early 2026 or something. So there you go. And Bruce is here, so I'd love to hear his input as I pass it over to you guys. So sorry if you guys missed the sale that we had on Forex Analytix. It was our liberation offer. It is officially gone, but that's not bad for you guys because now you can take a $1 trial and try it for 10 days. So go ahead and jump in our chat room, come in for 10 days, see how much you like it, because we might have another sale sometime this summer. All right. Thanks, everybody.
Yeah, and $1 trial is very cheap because you don't have attorney fees. Okay, so come on in and and find.
Good one.
All right. Anyway, a dad joke that worked. So thank you, Ryan, my trading warrior brother, K-Man, my
Thanks,
trading
mate.
warrior brother, and Blake. Good, real nice start to the week. I expect momentum of great trading to build throughout the rest of the week. So those are my expectations, and I doubt I'll be disappointed. So
Thanks, Coach.
thank you, guys. So Bruce, you tried to escape the rotation, and I just wouldn't let you go. You're too important to to let go with your looks and your point and figure chart. So it's great to have you back, buddy.
I tried to get out and they just pulled me back.
Yeah, we're like Hotel California. You can check out, but you can't leave. And also, when you're a guest at Forex Analytix, it's kind of like the mafia. So yeah,
and you guys,
you're a made man you're a made man in this community. So
and as always, you're razor sharp today, all of you.
All right. Well, Bruce, really interested. So much has happened since you and I last talked. I think the last time we talked was before the election. Wasn't it?
I bet that's true. Yeah, I bet that's true. And
then we had that big sell-off in equities to 4,800. So What's on the menu for you? What are you seeing in this environment? This Trump 2.0 markets that we're trading, any comment on it's more difficult to hold positions? Are you telling people to reduce leverage and use wider stops? How are you approaching Trump 2.0?
Well, I thought a request from to you
Blake?
and Blake is to maybe put that Bitcoin chart back up.
Okay, let's start there.
And
I can.
yeah,
Do you want me to put it up?
yeah, Blake, put it
Hey,
back
good
up
morning,
there.
Bruce, by the way.
Good morning. Gosh,
Good morning.
thanks
Here,
for having me
put-
back.
Oh
Yeah.
yeah,
Uh, always
There you
love
go.
to hang with you guys.
you know, I wasn't going to let you escape. Some people have escaped, but we had to take them out anyway.
Well,
So go ahead, bro.
well, this accumulation over here on the left is substantial. You can see the hinge, kind of a hinge movement there as it comes into a conclusion. And this is the period from at the beginning of the chart. Uh, yeah, well, and I'm
Left.
looking actually
Oh
even
yeah,
further to the left,
yeah,
but just to that sets up its subsequent move, and you can see how it hinges, an old Wyckoff term where higher lows, lower highs. But what that really is indicative of is absorption. And so smart money is absorbing Bitcoin in here for a move higher. And when it starts to cascade up out of that hinge and the prior high, it just takes off. Now here, this is interesting. What has just happened in this this sharp trend up that we just had is that, yeah, in this recent test of that high, the thing we absolutely have to have, and this is the thing about Wyckoff, and I'll talk about this more in a minute with the stock market, is that we just follow the tape, where we're just looking at the bars, looking at the volume, day by day, week by week, and so we notice that it really rallied sharply up to a minor new high, up past that X point.
yeah.
Thank you. And then it comes right back in again. And this is what we absolutely have to have if Bitcoin's going to go higher, is that we need to see Bitcoin consolidate in a tight range, dull, diminishing volume throughout this tight range, right around the highs. And what would have been even better is if it had jumped out above the X point and then stayed up and out and then got dull and tight and quiet. Okay. And the fact that that's not happening here and it's pulling back in, we have to really be on our toes, as Blake pointed out, for this to drop right back down towards the lows again. And the difference between this rally phase that we just went through, which is very sharp, short, sharp, and just recovered the losses that occurred, is that look at the difference over here in this reaccumulation that we just looked at. And that is that look at how it just doesn't give up any ground on its way up to resistance and then jumping out. And so, see, this is what needs to happen here. And it's so far, it looks very troublesome to me. So if it breaks down, we don't want to go more than a third retracement, as much as a half, which you can see right there with the fib retracements. Yeah. And that's it. And if it goes a half, and that's a lot, it would be something that we would, we would want to be protected against that, which also pulls us back to the moving average, more or less.
And also, if you believe the correlation may have something to do with, so I'm really interested in seeing your S&P work, because, there are times, and sometimes Bitcoin leads what's going to happen. It's do you consider it a liquidity measure, Bruce?
Oh, sure.
On other things?
Absolutely. Okay. As a matter of fact, one of my favorite little charts that I didn't bring it today, but is to go back over many, many years and correlate Bitcoin and Nvidia, which makes a lot of sense,
Oh,
right?
that's interesting. Okay.
Yeah, they go together, but also they are the two favorite vehicles for speculation, and so we know why they're related to each other, but also we know that speculators, loved when they have high liquidity. The system has high liquidity. They love to campaign Bitcoin and Nvidia, and look at them both now. So Bitcoin or Nvidia started
You're not
first.
showing your screen right now, Bruce, unless you.
Yeah, and I don't have it in front of me, unfortunately. But
Oh, okay. All right.
But thank you. And then, but really the thing here is just that Nvidia has been going sideways for nearly a year now.
It hasn't
And
made a new
so
high since last August, a
there you
year
go.
ago. Yeah.
There you go. And so, if Bitcoin and Nvidia are correlated, and I think that's a great exercise for people to do, then, Bitcoin, I think, is at risk for doing the same thing with a lag,
Yeah.
bit of a lag.
Yeah.
Anyway, so this is an old opening slide that I had from years ago because I tried to get out, but they keep pulling me back. And so this is an old distribution study that we did together.
Oh,
And
wow.
yeah, and so this guy on the left, see, and I'm here for therapy today. I'm putting you to work, Dale.
Okay.
Because
I'm known as a trading psychiatrist.
good,
So
because I
what?
need you today, buddy.
All right.
All right. So this guy
Lay
on the
down
left,
on my couch.
this is like the 1906 political cartoon. And this is Mr. Wall Street over here on the left with his feet in the Epsom
Yeah.
salts and so on, and a block of ice on his head. And
Yeah.
then the chart. So this is a very old chart, cartoon. And then the guy on the right is also, I think, even an older cartoon. And you can see the bulls bulling him up to the peak. And that's
Yeah.
the public right there. And so we can see that that's what happens is that the bulls are chasing the public up. And if anybody has interest in Wyckoff, they can go to Wyckoff Analytics, and there's lots of free material and cool stuff. Ramon and I do a weekly Wyckoff call, also Wyckoff market discussion. But today we're going to talk a little bit about the concept of distribution, as Blake had just shown with that very cool schematic that he had. So maybe we'll come back to these, but these are just sort of like roadmaps, and I'll show you why in a minute. First of all, this is the reason I'm conflicted and I need counseling, and that is that I've been a bull now since really mid 23, and I'll show you why, and have been campaigning this market up. But now there's still reason to think the market can go higher, but also there's some real conflicting indications and things that give me caution. And so here, seasonality, this is the seasonality for 2025 based just on post-election years going back to 1949. And so the blue line represents what the average post-election year looks like on a seasonal basis. And this red line is what we've actually done up through Friday. And so you can see there is a rhyme here. Sometimes they can be different, but you can see that the low came in late February and then into April, early April. Well, in fact, the market made its final low with that big whoosh down at the beginning of April. And then it started its uptrend, which is what the seasonals had suggested would happen. And now from here, we see weakness really through the end of June. And then higher highs into August, bigger correction in September, and then high into the end of the year. And so on balance, this is a very much trading year, as we have seen, but it has an upward bias to it.
So you just did a great self-diagnosis, and I have my patients at first talk about what's on their mind. So the conclusion that you've come to, I think, is correct that it's not that you have to be more tactical this year, where you just can't buy the spider and go to the golf course and ignore it.
Well,
So you're
boy.
healed. You're healed.
Well, I have to give you the conflicting part.
Oh,
So
I thought I
yeah,
guessed
yeah.
it.
Well,
All right.
but my half hour's not up yet.
Okay.
So
I'll let you. I'll let you know, man. You're right.
okay,
You
all
still have
right.
half a session left. Go ahead.
So this is a decennial pattern. I love these, and they either work really well or they don't work at all. 70s didn't work at all. So this is the 2020s, 0 year to the end of the 9 year. And if you look at the 70s, not at all, very high inflation period. The 80s was exceptionally good, high correlation. But this red sort of line here is the S&P put up against the decennial so far. And so it's actually pretty darn good. And you have to kind of look at this COVID period over here on the left. The low that we got at the beginning of the 0 year actually should have come in the middle of the 0 year, but we got a low in the 0 year. And then we got a high in the 1 year, which was a lower high on the decennial. And then down we went, and the lowest low we generally get is in the middle of the 2 year, exactly what happened in the 80s as an example. And then start to work our way into a really good uptrend. And of course, what we all notice is that the 5th year is just exceptional. And so,
There
I
we
mean,
are.
it's just straight up. And here we are. Well, we've had this big hiccup here in the 5th year, and we're starting to work our way back up again. So the question becomes, can we get to a new high and keep going? And then if that is the case, and I think that would be really dependent on tariffs, among other things, working and the plan working, et cetera, et cetera. So this is what's going on. And so far, I think there's a rhyme between the decennial, and this is all the way back to 1897, every year lined up. And
Maybe you resolve your conflict with your point and figure work, which is
well, it's coming.
all
It's
right.
coming.
Oh, go
So
ahead.
then here is we love to look at trend work, all time frames. Here's the trend channel going back to 2011. This is effectively the trend of the bull market. And look how beautifully, this is a Wyckoff concept. He said, you'll set the stride of the trend. And this is in all time frames very, very early on. And that, so you have, in this case, we have 2 adjacent highs. As soon as we get that second high, which we could actually start here, we extend that out. And this is called a supply line because it's over the top of the trading. And then we have an oversold line where we draw a parallel across the intervening low between these 2 points. And you can see how well this has defined the upward stride of the bull ever since. And it's been an exceptional bull, incredible. But as is pointed out, markets are cyclical. And on this pullback that we had in 25, we went right to the oversold line and rallied. And I want to point out that here's the 21 bull market top. And this is a Keltner channel. So this Keltner channel, and this is monthly data, this Keltner channel, it rode across the top of this Keltner channel for about 9 months. And then we went into the 22 bear, which actually broke the low of the stride and then, reaccumulated itself and got back in. But so far, this bull market has only gotten to the midpoint of the advancing trend channel, and it got back up to the top of the Keltner, where it rode along here and then it broke. So now I really want to see this stay above the oversold line and start to rally to new highs. And do note that because it didn't get back to the supply line, that this to me is a form of internal weakness and divergent characteristics. And if we do start to show weakness and break down through the low of the oversold line, I believe that the low band of the Keltner is achievable. And
what's that, 4,500?
Yes, 4463.
Because there are some counts that would allow for that before the next major advance.
So now,
not many.
yeah, so looking here, this is the part where I get conflicted, is that here's the last, so 2015, and it breaks below on the MACD, and this is monthly data, so the market followed the MACD down. And then also you can see here, here's the 21-22 top, which was very overbought, and it broke that down and then had an important reaction. And here we are just turning down below this signal line here, which you can see down here. And so this is something to watch very, very closely. And I think if you confirm it with this break up here of the lower oversold line, I think we have to be, as you point out, very tactical and careful.
I always think tactically, but go
yes,
ahead.
you do. And it's the way you have to treat these markets always. Now, this is a chart I put up here before, and this is from January of 23. And this is the point that I thought that the accumulation was finished. And here's our hinge, which is just like the hinge we looked at in Bitcoin. And it counted at that time, we were at 39.47. And at that time, we made the case for a new bull run, even though interest rates were going up, they were high, people were very, very, very bearish at that time. And people thought I was certifiable, but I said, this market could go 62.75, 65.50. And in fact, you know, we got up to around 61 so far, and we still have the potential for higher. And that would be consistent with our decennial pattern. This is an accumulation study, same data, just slightly different way to construct the chart. And it counts up 6,350, 6,700. And so there is the potential here for higher prices. And I always want to be a bull. I always want to stay with the existing trend. And so I don't know how much time we have left, but I'm just going to put these
Don't worry about it. Just go till you're done.
Okay, thank you. And so you can't give me a diagnosis until I do.
I already have it written down.
Oh, you have it
I've already written the prescription, buddy. So go ahead and finish. Go ahead.
Anyway, so here are the two distribution schematics that we just looked at the beginning. This on the left is the NASDAQ 100. On the right is the S&P, and this is the 21-22 bull top. And I only put these up. Please screen capture them, really study them if you care. These are the Wyckoff characteristics of distribution unfolding on this chart. And so you can see here that the thing that you're noticing is the increased volatility as you go into the right side of the chart structure. And there's a very good reason for that. Look at the volatility just keeps showing up over here. And we call these signs of weakness, lower lows. And so these, and you can see them on the schematics, is that this is a real indication that stocks in weak hands. Stocks can't go up. No commodity, no index, no stock can go up unless the underlying asset is in strong hands. And so this is what we're effectively attempting to ascertain from looking at the chart and the structure and the volume and the spreads, as we're trying to determine whether stock is in weak hands or strong hands. Strong hands is going to drive stocks higher. And here, this
Well,
is just simply not the case.
the narrative is that it was retail that bought it and drove. They bought the dip. There's a ton of institutional cash on the sideline. Therefore, maybe institutions can generate a correction for an entry so they don't have to just be squeezed in. But the argument is there's a lot of fuel to
and
get long.
That's exactly what Richard E. Wyckoff would say. You're absolutely in alignment with him, and it's just the truth of the markets.
Yeah,
and it's just lost on a lot of people that this is the way markets actually function, and you need to really like own that knowledge. So now here is the 2025 top that we had, and then I took account of that.
nice.
This is April of 25.
Yeah.
And you can see here that it counted 5,000 to 48.75, and we went to 48.35. We got within one box of fulfilling perfectly our count. And that's where that low came in early April. And then it was confirmed by this redistribution right here. And here's the chart up to date through Friday. This is the S&P. And this is the stocks above their 50-day moving average, which is a really good way to look at breadth. And this, just don't capture this chart if you care. And this is the way I keep my journal, my notes on the market. So if you were to roll this chart back, there'd be notes and notes and notes and notes through history, because I can go back and look at these, and I know exactly what I was thinking and projecting. Okay, but here, what I want to do is I want to get into this area today. And I want you to think in terms of what happened back in 21, 22. And here you can see this is where we are now. And so this is through, I believe it's through, the end of the month. And this is a classic distributional structure. And this is exactly why I'm pretty worried about the this market on a
short-term basis,
business cycle basis.
Okay.
Yeah, because could we be setting up a condition that is like 21, 22 was? And going back, I mean, here is the distributional structure of that period before. And then this is what we got, which was a relatively modest bear, but it was painful for many. Yeah. And here we all note that this is bigger.
Yeah.
So bigger structure means likely bigger decline if it starts to break down.
How about velocity of the first break? Does that play a role?
Absolutely, because as you saw over here, look at these two signs of weakness.
Yeah.
And these two signs of weakness are very important, because they break this low here, and then you get this really good rally into an LPSY. Well, look what happened. We had a very, very deep break that not only took out this low, but took out this low, and
went to the breakout. 4,800 was a breakout. If you go left.
Yes, you're way ahead of me. Yeah, and see, that's exactly it. It pulled all the way back to the high of the old bull market.
Yeah.
And so this is and now I'm going to jump ahead to a couple of other important charts. So this one here is just a closer look with my Wyckoff notations, so that you can sort of see my thinking here. This is a sign of weakness, bigger sign of weakness. And look at the volatility come in. And this is what I was just talking about with Bitcoin, is we do not want Bitcoin to come back down again and come down hard, because that just means that we're in some kind of a big range bound structure or worse. And here, this decline, which is exactly Dale's point, is a huge red flag, because this is way too much volatility for a bull market. You get this kind of volatility or this kind of volatility, but you don't get this.
Yeah, I think this was the biggest Sigma event. I think that's what they called it, like a 3. Do you know Sigma? What it is? Sigma, it's kind of like the Richter scale. for
Mhm.
markets. Anyway, it
Yes.
was huge.
And so, and this compares against all the other comparable events in the past, and it stands out as unique among even some of the other big bear markets. So that's a good point. And so here's the schematic that might be involved here: upthrust after distribution, secondary test or an upthrust, buying climax, automatic reaction, and then bang. And now the big question, Dale, becomes, is this all part of a bigger distribution?
Yeah.
And so what we really need to see here is consolidation without giving up much ground, and then a continuation of the rally back above these highs for our seasonality work to be useful, et cetera, et cetera. And then I'm going to button this up with one more chart. And well, let me do two. And that is, here's the NASDAQ. So here's what the NASDAQ looks like. 21, 22 bull. Here we are now. Bigger structure here than here. And you can see that we pulled back right to where we broke out on the NASDAQ 100.
Yeah.
And, but I want to really emphasize a point on the chart here back in 22. Look at this rally phase that we had that went to a lower high. We call that a last point of supply, went right up into the moving average, stalled there, and look at this like inverted V-top reversal. And down it went very hard. And note that the stocks above their 50-day moving average, both on the NASDAQ 100 and the comp, which is what these two data sets are, is look at here on the 100, it went all the way down to about 10% stocks above their 50-day, and then rallied all the way back up and almost touched 80 in very short order, straight up. And that's exactly what happened here. And this was in the context of a bigger bear market, bigger decline.
So you'd imply that's a possibility here.
So look here. I mean, this got a little weaker, went slightly below 10, and then it rallied up slightly above 80. The rally phase was, I think, even stronger here than here.
It was.
But do we have the capacity here to stop this advance and then start to turn down? And could we have an inverted V top? And that's the thing that I have my spidey sense about, is can we hold here, tight range, consolidate, and then take out the highs here? Or if we fall below the buying climax peak of this zone, which is this area right here, approximately
55, 56.
20,500.
Oh, we're on the NASDAQ. That's right.
Yeah,
Okay.
Sorry. I should have said
Yeah,
that.
that's right. 25.
And so if we break back below that, I would just be super cautious, because it could very well, you could find this market back down to these prior lows quickly. And that would be a real sign that we're completing distribution. And this is not a reaccumulation for higher prices. And last chart here, this is call to put ratio for equities. Yeah. So just SIBO call put. And so I inverted it just so that it would be pointing the right way. And something very unusual happened back starting in October, really September to October, is that usually when you get a lot of call buying and you get into the optimism zone here in the yellow, it pulls away from that pretty quickly and starts to correct. But here in September, October, it got up here and it lived up here all the way into February and made its highest high of call buying, call activity here in late January, early February.
Yeah.
And so a lot of optimism, but the market was going nowhere. So people were optimistic, but the market wasn't giving them confirmation. Right. And then we got this break. And this break did not even put us into the pessimism zone. It got us really close before the rally started. But now this is the
Oh
part.
God, you had the greedometer clock broken under extreme fear.
Yes, exactly. And here, yeah, exactly. And we didn't, I mean, so the put activity was not fierce.
As
I mean, it was
extreme.
bad.
Yeah.
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 But the other part is, and this is something I've been looking at this data for 40 years. And the other thing that happens is when you get into a new bear market, or you get into a new bull market, in the case here, the optimism comes right back. And so here you are, look at this rally phase. It's a lower high, but the call activity here actually is a 10-day moving average, the dark blue line. This is actually the highest it's been in over a year. So it's actually got higher than it even did back in this area where it was just living up here.
Yeah. So now I know why you're conflicted.
Well, no, don't tell me you're conflicted. I need
I
need guidance.
All right. Well, here's your guidance for confliction.
Thank you.
Confliction is also means I don't know. And
yes.
A lot of people can't even say that because they think they should always know.
Yes.
And you don't always know. But
yes.
what you do know, this is a prescription, that you have triggers and methods and levels that are going to help you know. So it's okay to wait until you know and just let the market trade until your work gives you a confirmation that puts the probabilities in your favor. So that's why you're conflicted, because you're awaiting confirmation. And we all feel uncomfortable waiting.
And Dale, that's exactly why I'm here today. I needed that. I needed that. And I will finish my comments with just saying, a dear old friend who was a retired Major League Baseball player, had a great career. And he used to say this to me quite often. He says, sometimes you never know.
Yeah, that's right. And people aren't. And the other thing that people choke on, I was wrong.
Yeah. Yeah.
So people have their egos for these things. So it's okay to not know. It's also okay to be wrong if you've, calculated your risk before you took the trade.
Yeah.
And I go through it all the time. I don't know. I don't have conviction. I don't know what to do. People want ideas, and I just have to say I don't know, but I will. So that's it. You're healed and cured, and
Dale, you gave us all wise words. And
yeah,
we're grateful.
Tonight your assignment is to stand in front of the mirror and say, I don't know, and it's okay because I will, 10 times.
Okay, I'm doing it.
I want it on recording and sent to me. I'm kidding.
And then I'm going to sleep like a baby.
Thanks for being back, Bruce. Some great
Dale,
looks.
So great to be with you and with everyone. And see you next time.
It was fun.
Always fun. Always fun.
All right, everyone. Good hunting. You could join the team in 7 minutes on the Morning Edge. You could find Bruce. He showed you where to do it, and on X at RD Wyckoff. And Bruce's work is elite.
Oh, you're too kind. You're too kind.
All right. Well, if you know, it is. So everyone have a great day trading. Don't just count your pips, count your blessings. People are thanking you, Bruce. You're welcome, everyone. And we'll see Bruce in another 90 days or so, because he's not getting away. And now you know why. So
thank you all.
Thank you, Bruce. My trading warrior brother, Bruce Fraser. And
Take care,
is a wrap. This is a wrap. Adios, everyone. You're welcome. You're welcome, Laura, Mandy. Yeah. Oh, Linda Rashke's has a poster of you, Bruce, on her wall. All right. So you're a famous guy. Anyway, that's it. That's a wrap. Good luck the rest of the day. See you for turnaround